Hello and welcome to another update video about gold. As you probably have seen in the last video, I did change a little bit the corrective or the nature of this correction here that started back in August 2020. Due to the latest dip, I had to change it into a WXY XZ pattern, which allows me to count this move down here as an ABC pattern, which basically would fit in nicely and would imply that the next low could be the last one. But as I said, it could go down very well into the area around $1,600. But if we drop below $1,600, then we need to make sure that we get back above the $1,600 level at least in the same week, better during the same day. Because if we don't, then the retracements of that wave 3 will go lower than the 50% fib retracement. And if we do that, it is only very, very unlikely that this is still a wave 4. Because we talked about this being a wave 1, 2, 3, here the 4 and the 5 still coming. The problem is now, if we break below that 50% fib level at roughly $1,600, and this will basically invalidate the wave 4, or at least make it very unreliable, and then we're moving into a different pattern, which could see prices all the way down to possibly even $1,000 and beyond that. Yeah, I mean, there are other patterns how to make that work, but what I can tell you, if we go below the $1,600 level, either way, it won't be good. It will mean quite a strong additional sell-off. But in the current scenario, which would be followed by another rally to the upside into the region around $2,500, maybe even more, then we would need to stay above 1,600 to make that work. Yeah, that this is a wave 4 and the wave 5 still coming. And I mean, this can take years to play out, as I said. So in the very short term, basically no real change to the last video, just a confirmation that the wave 4 could be over. So as I said, we can count an ABC pattern, the wave C ideally ending above $1,600. In the wave C, we can count a 1, a 2, a 3, a 4, and the 5 still coming. And it could very well be that this wave 4 is done. It could also be that it's still happening and will become a triangle. So just to explain, obviously an ABC pattern is very common for a wave 4, and this could have peaked. Now, to get confirmation that we are already in the wave 5, we would need to see a move below 1667, the wave B low. If we don't see that yet and we extend the sideways range, then it could very well be that this is an Elliott wave triangle, A, B, C, D, E. Here, the wave D is limited by the low of the wave B. So again, same story, 1667. It shouldn't go below that. And the wave E, here, which should still go a little bit up from here, but that needs to stay below the wave C. So basically below 1688. So as long as that's the case, below 1688, I would expect this to break down either directly, then we would have an ABC, or after a little bit of a move up, that would, however, have to stay below 1688. And that is sort of my view here. Again, breakout point is 1667 or 1668. So wave 4 possibility is still ongoing, or there will be one more leg up and then it comes down. These would be sort of the most likely options how I see it. Could the wave 4 go any higher? Let's take a look, and for that we take a look at the Fibonacci retracements. You can see that the wave 4 reached the minimum retracement for a wave 4 at 1690. Yeah, of course it could go higher, so without a problem we could see a wave 4 that will extend up to 1707, the 38.2% fib level. That is possible. So here the point is, this is definitely possible, but as soon as we get this break below 1667, then it's pretty clear that we are in the wave 5 down. So short-term corrective moves are always possible, like this one here, And you know, the 1707 level is actually the ideal retracement for such a wave 4. So this would be possible. You know, you never know what happens, for example, when the Fed is announcing their forecast and interest rate decision. Depending on the forecast, you know, we could see a bit of a rally. That could be that wave 4 rally. Now that is speculation, but I just give you possibilities what the market is capable of. Then to be fair, a move to the 38.2% fib level at 1707 is actually fairly likely, because it is normally the most likely retracement level for a wave 4. So we just need to have it on the radar. Yeah, these are the key resistance levels: 1690, 1707, and it could even extend all the way to 1721. That's the 50% fib level. That's not that common for a wave 4, but it happens. So, but this would be the maximum. If we go any way below that, in any way above that, sorry, if we go in any way above 1721, then it's most likely not a wave 4 anymore. Yeah, and then we need to rethink the whole scenario. Maybe we're then already in a breakout, which is definitely possible because we've reached my target area here. Yeah, and because we have reached this target area, it is at any time possible that the market reverses. However, at the moment, I don't think that's a reasonable assumption, because we can still move higher in the current wave 4 before it gets unrealistic. And because of the overall nature of this chart, I would rather suggest that we need one more leg down in a wave 5, possibly to that 1605 level. Yeah, and that's my update about gold. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.